Yeah, so we have the executive vice president of Cardone Capital, Ryan Tseko, the man who, has been building and managing Grant Cardone's, massive real estate portfolio. So welcome, Ryan. Great to see you.
Great to be seen, and thanks for having me. I know Zuad and you were mentioning the view. I mean, look, all real estate's not created equal, but I'm here to add value and here to provide a service. So thanks for having me, Kevin.
Yeah, thank you. I love your story, and I'd love to touch on a little bit. I mean, you didn't come from the background in finance and fund management. I mean, you're a normal dude. You're a commercial airline pilot, right? How did you go from that to where you are now?
Well, look, so my uncle was a builder when I was a young guy, and I've always been fascinated by real estate and building and really growing. And so real estate was always that platform for me. When I looked up, I was 17, 18 years old. I wanted to do my first deal, and I looked to my uncle, and he's like, "Well, Ryan, you're broke. You don't have any money." So I turned to flying because he had an airplane, and my first career, as you mentioned, was actually a commercial airline pilot where I found a lot of great mentors and learned a lot of great things about, checklists and, very, very analytical. Being a pilot, there's a lot of skill and a lot of attention to detail that goes into that. When I hit 30 years old, I said, what's next? Because I wanted to get back into the real estate game. And at the time, a lot of the rules and regulations were changing. And I also, Kevin, one of the things that I want to mention is that when I joined the airlines, the 401ks and these different retirement plans, like it just never made sense to me. Like that was not the route that I wanted to go. So I always wanted to be invested in real estate because I didn't want my father's retirement plan. Like I knew that was broken. I knew that was never going to work. And so I wanted to get back into the real estate game. And at 30 years old, I found Grant Cardone on YouTube. And I said, man, if he's buying an airplane and he's already got a portfolio of 3,000 units, this would be perfect for a guy like me to use the skill set that I already have and then go and help him build something massive where we could also allow other people to invest in these deals that have never, like you mentioned in the intro, people have never had access to these institutional quality deals until about 8-9 years ago when the Job Act passed.
Right. So, tell me, like, what have you done, since you've been there, though? Tell me a little bit about, the portfolio and the properties that, you guys have, acquired.
Well, look, we acquire a lot of core, very nice Class A, just great located properties. When we started with our first deal. It was 192 units. The deal was $20 million. We did $15 million in debt, $5 million in equity, oversubscribed that. We're now on close to deal 40. We have almost 13,000 multifamily apartments, and really we focus on Florida, Texas, and Arizona, the Sun Belt states. And look, we built this one deal at a time. This is not something where it's like, oh, you just, snap your finger and the investor portal pops up, or, you snap your finger and you have all these deals. We have Regulation A, which is the non-accredited fund. We have Regulation D, which is the accredited fund. And we run both of those parallel. And we've really been able to grow out a fantastic portfolio. And, Cardone Capital is now, one of the leaders in crowdfunding.
So, how... to buy, I mean, I think I saw you've raised what, 1.2, 1.3 billion dollars. I mean, that's a lot of money. That's more than the market cap of, many, publicly traded REITs. I mean, that's serious. That's significant. How are you raising this money? Like, where are you finding all of these, individual investors, and then, not just finding them, but getting that trust for them to, invest their money with you guys?
Well, a lot of people know Grant Cardone, and when we started our first fund, he had probably 6-7 million followers on social media because Reg D 506C, you can now do crowdfunding as long as they're accredited and they with a third party to give you the validation. That has completely changed the game when it comes to raising money for real estate, and we've really just built it off of Grant Cardone and his platform and his not followers but truly friends on social media, and we have now converted them to investors. Kevin, here's what we're finding. A lot of it doesn't matter the age, right? From 20, 30, 40, 50, 60 plus years old, we're seeing a lot of people, they want equity. A lot of people want to take their money And again, they don't want to invest in the 401k. They want to invest it into a real asset. So when people see these deals, they're like, wow, I could never go and do that deal on my own. I could never go and find it, fund it, do the debt, and also manage it. Because as you know, property management's pretty intensive. And so what happens is we allow them to come in to these deals as a partner, as an investor. And that's really how we've built this. We've had a lot of referrals. We've had a lot of recommendations. And then also you think about it, right? As part of our platform, we also have a lot of business owners. And as a business owner, you make a lot of money, but you don't have the time to go and invest in real estate. So I truly, like, I want to just share with people, like, sometimes these partnerships are the best thing in the world, because when you find a guy and you find a team that has the best deals, sometimes the easiest thing to do is take the money you've earned out of your, whether it's your job or your business, and invest it in deals that are already baked, already done.
Yeah, absolutely. That makes sense. So, tell me, right now, I mean, I can't even think of a short, easy way to describe the market lately. I mean, there's so many things that have been happening. So where things are right now, I mean, where are you seeing the opportunities? What are you guys targeting and are looking for?
So we are buyers in all markets. What I'm finding right now is that debt is the biggest issue in the real estate marketplace. When debt goes from 3.5% to 7.5%, it's a 400 basis point, plus spread. What I've seen right now is cap rates have, gone 150 to 200 basis point spread, but we're still seeing a little bit of a disconnect between buyers and sellers. What are sellers willing to sell for? What are buyers willing to pay? Because in these big real estate deals, what you see a lot of, depending on the market, depending on the location, depending on the quality of the asset, is you want to get leverage that actually helps the deal, not hurts it. And so I don't know, Kev, the talk of the town is there's $2.2 trillion of debt coming due in the next 3 and 4 years. I honestly believe that there's going to be issues when it comes to these deals. And I don't think there's a way out for some of these deals, especially office. There's going to be a lot of pain in the office market. If occupancy stays where it is and interest rates stay where they are, I think we're going to see a lot of deals coming back to the market at a steep discount.
Okay, interesting. So I'd like to talk a little bit about some of the the assets that you guys have already acquired as well. I know I've seen some beautiful properties. I think we have your website up here. Yeah. What are we looking at? I mean, what are and what stands out about these assets? What are you guys? I believe you guys maybe do some renovations to them. You rebrand them. Talk me through that a little bit.
Well, look, what you're looking at right now is you're looking at a couple assets in South Florida. South Florida is a state that has great rules and regulations. A lot of people, migration, we look at migration patterns, right? And I think a lot of investors should look at migration patterns. There's an easy saying in the Rule Book 101, where the people go, the returns go. We have great assets in great locations. These are already built. So we don't do the build model. We actually buy existing assets. And so when investors come in, this is a great note, Kev. When investors come in, typically 30 to 45 days after we close on the deal, they start receiving a distribution. For the accredited fund, we pay out distributions every single month. But this is the quality. I just really wanted to show off the quality and the type of asset that we're allowing investors to come into, because I could sit up here and tell people about what we're doing, but until you see that building on Las Solis Walk, you really don't get the full picture. So these deals are available to all of us now. And that's what I'm truly proud about at Cardone Capital. It's fantastic. I mean, look at that deal. We bought that from a high institution. They were, built it to sell it. And, we've really built a phenomenal portfolio.
Yeah. I mean, those are impressive. I mean, to me, if I've got money that I can go and buy a single family rental or a duplex or get in on that property, I mean, I want a piece of that. That's a beautiful, in all of these, looking through these are magnificent. So,
and Kevin,
why?
Kevin, what I'm finding also too, what I'm finding is when you're buying assets from institutions, there's less emotion to it. I don't think there's going to be a huge crash in the single family market, because people with, their fixed rate 3% and below, they're not going anywhere. They're not selling. It's putting pressure on the market. With these, when you go and buy these, there's no emotion to it. Typically the merchant builders, they build to sell. And so it doesn't matter what type of market it's in, whether it's a 4-cap market, a 5-cap market, or a 6-cap market, they're sellers. And so we're just, again, sometimes you got to find deals that are real deals. In order to get a real deal, you have to have a real seller.
No, absolutely. So, talk me through a little bit about, why these assets though? There are, I see funds that focus on, class B and C and, different like secondary markets. And, we're looking at these properties. I mean, these are high end, these are, looks like probably some of the nicest apartment buildings in these areas. I mean, why is that your focus when, maybe you could buy more units for less, if you were looking at, the class B and C?
Well, we're looking at a couple of things, Kevin. I think it's a great question. When cap rates in history, cap rates are never the same, right? And they started becoming the same, meaning you can go and buy a value add deal for a 5-cap and you can go and buy a core deal for a 5-cap. If you look at those two different models, this one takes more work when you're going out there and you're buying and you're renovating and you got more execution risk because you're hoping and praying the rents go up. With this one, it's much more of a simple business model. You buy it, it's already done. You're really just writing the rent increases. And so I think that when you're looking at an execution rate risk adjusted, like you're looking at, okay, you're adjusting for all this and you're just simply looking at, I'm going to go buy a better asset in a better location and just ride the rent growth instead of going out and doing, this value add. So I'm not a big believer in buying the ugly house or the ugly property and, adding value. Although if it's in the right location and the right metrics achieve that, I am willing to do it. For example, we bought a deal in Boca Raton. The rents were $2,000 and we've been able to spend 25 per unit and increase the rents to $3,000. It's a 25, 30% return on the money, but the numbers have got to work and you've got to really, really, really like the location. So again, we'll go and buy a piece of real estate in a second and a tertiary market, but it's got to be, we never move away from, it's got to be a great piece of real estate. It's got to be a great location. And we're also looking at supply and demand, right? And then we're also right now really, really heavy looking at what does it cost to build the real estate? Because there will be a housing shortage. Right now, there's not a lot of starts in the multifamily space and really in a lot of housing. And so we think because the debt market is so tight that you're going to run through the supply and then you're not going to have any starts. And so in 2 and 3 and 4 years, you're going to then have a housing shortage. And so we're going to be prepared for that. So we'll buy across the spectrum, but we just want to make sure that the return profile meets and exceeds the investors. Our number one focus, Kev, it's not Grant, it's not Ryan, it's not the team, it's the investors. We want to make sure the investors are happy with the return. We want to make sure the investors are happy with the quality of the asset.
Okay, and it sounds like they must be. As much capital as you've raised, I assume that you have a lot of repeat investors so far. I remember seeing last year, I think you record distributions, right?
Yeah, we hit almost $60 million in distributions. We send out, typically it's, 5, 5.5, 6. Last month, I think we sent out $6.5 million to the investors. So, look, we collect the rents on the 1st and we pay them out on the 15th for the accredited fund. This is just something like we wanted to go with that model because all of us, from an investor standpoint, we wanted to get paid out monthly, not all deals pay out quarterly. And that's typically what these private equity groups do. They pay out quarterly. Monthly is just more workload, but it's, look, we're doing this because we want to create something new. We want to create something different and we have the tools in place to do that. So here we are.
Oh, that's awesome. So, all right. So let me get real here. Like I said, you said, the real estate market's funny. You talked about all this debt coming due. So, I mean, really, is now actually a good time to invest in real estate? I mean, should people kind of be sitting on the sidelines for a little while or what do you think?
Kev, I think it's going to be a Robin Hood moment. The next 12 to 18 months, I think there's going to be fantastic deals. If you know how to find the deal, fund the deal, get control of the deal and close it, I think in that sweet spot of, call it $20 million to $150 million deal, I think there's going to be some great opportunities. There may not be great opportunities in single family homes, especially in Miami, but I think there's going to be, with all this debt coming due, I think now is the time to buy, especially if you're going to hold on to these assets for long term. The higher the higher and longer the debt is up, the better deals you're going to see in real estate.
All right, so that sounds kind of exciting. So, what's what's the process like? So, we saw the website. Somebody goes to cardonecapital.com. They're like, I want to get into one of these deals. Whether accredited or non. I mean, what's that process look like for somebody?
Well, there's two different types. So we offer accredited and non-accredited investors the opportunity to invest in these deals. You go to the website, you say get started, and then you just go through and complete a couple steps, fill out your paperwork, and you actually just send the money in, and we invest it in the deals. It's very simple. I mean, we've created something here, Kev, where people now can, within an hour, put minimum's $5,000 for the non-accredited or $100,000 for the accredited. People can start investing in real estate today.
Wow, so it's pretty simple. All right.
It's much more simple, Kev, than going out and finding your own deal, doing due diligence on your own deal, walking all the units, lease out all the units, managing the tenants, negotiating the bank, the debt with the bank. All of our partnerships that we've created with, whether it's the bank or whether it's from the sellers, to even go and get this deal awarded, it feels like a complete full-time job. So I'm just telling, like, for everybody on this call, whether you do it with us or you do it with somebody else, these types of deals, I personally believe, will perform and do fantastic over the next 10 years.
Awesome. All right. Hey, thank you so much, Ryan. It always is great talking to you. So insightful. Anything else you want to, say real quick before we send you off?
No, I just think that, people need to look at, going back to the retirement, right? How do we all want to retire? Well, most of us want to retire with cash flow. So I'm here to say, I'm personally invested in real estate. I wanted to share what we were doing and how we're changing the way people look at deals. Anything I can do to help anybody, it's simple to find me, whether it's on social media or Google or Cardone Capital. But I'm always here to help. And thank you guys for running this event. I think it's an eye opener, and greatly appreciate you guys.